Hey YouTube, what's happening? Chris here. Want to bring you all a quick update on Digibyte. Guys, there's something that's crucial that we must do today, and we're going to get into that. So if you like these Digibyte videos, guys, you want me to keep covering Digibyte, I've been kind of figuring out what coins people really want me to do technical analysis on the most. So if you guys like Digibyte, smash that like button, let me know down below in the comments, and we'll keep doing the Digibytes once a week or twice a week, guys. So, what I wanted to get into here, the number one thing that I want to bring to you right now, what we need to see out of Digibyte today is a close up above this 200-day moving average, and that's in pink right here, guys. We do not want to lose that and go back underneath that again. What happened here? Do you see this, guys? We came down, we got a bounce off the 50-day moving average, we came up, and do you see all these wicks? Look how many days, guys. This was around like 10 days or so here. All this time, the bulls were trying to push up and the bears were saying, not today. And then eventually we closed back below it, and look how far we ended up dropping once we closed below that. So we just got back up above it again with this massive move here, guys. And we don't want to close back below that and start dropping back down, because then we'd have to start looking for support down right around here. And then it would be down around this trend line. This yellow trend line would ultimately be what needs to hold. That's basically right now, guys, we've been having higher lows, which have been taking place. So right now we still are in basically one of those short-term to intermediate-term bullish uptrends. So that's why we're looking for a bounce off here, guys. And you see this long wick that we're having today? That is proof now to the downside that the bulls are defending this 200-day. So we're going to have to see where we have to close. What I want to do is zoom in here a little bit tighter for you so you can see this. Do you see how big this fight is? Look at this candle here, guys. Basically like a massive long leg doji candle almost. So look at this wick down here. Look how low that goes, guys. So that's the bears trying to push it down, and then this is the bulls trying to push it all the way up. I mean, that's a massive swing, guys, just so you know, in terms of volatility. And now what you're seeing is basically this hammer candle that we're looking at there with this long wick to the downside, and this 50, this 200, and also this 20-day EMA are being defended right now. So if we could actually close where we're at today, this would be a more bullish candle, and we would want to see if we get any type of follow through to the upside tomorrow. And guys, remember, it's just stair stepping like that. Higher highs and higher lows are what we want, and we want them off the 200-day moving average. Can't emphasize that enough. Another thing I'm looking at to see if we do get this, guys, because this would be significant with this hammer candle if we were to close like that, and we also got a golden cross of our 100-day moving average over top of our 200-day moving average right here. So that 100's in green, and also this 20-day EMA crossing over both of them. So that could be a bullish cross right there, guys, or a golden cross to help push us back to the upside, because there's a lot of gains to be made to the upside there, even coming back up here to that 0.0149 area. So that's something we're looking at. Now what I'm going to do, I'm going to back out again, and we're going to look at some of these oscillators so we can kind of say, hey, are we going to get a bounce off this 200-day moving average? Is this a spot we should potentially go long, or could we just potentially roll over? And that's why now we're going to start formulating our plan with these oscillators, guys. And then overhead resistance, we're going to put it right here. So guys, obviously this spot would be, but we're just going to go up higher. This would be the main area I'd be looking at right there. Because if we got a nice bounce, we would run up and we'd try to challenge this, challenge over here, and you can see we wicked up to it over there as well. Alright, so moving on to the oscillators. Let's go to our stock RSI first. See how this is looking. Okay guys, so with our stock RSI, we're at 54 and 58, so there's plenty of room to run to the upside. So that's a good thing. We're not in overbought territory right now. And another thing I wanted to point out is it looks like we're wanting to get a little cross here. So if we were to get a cross there and close a hammer candle, those are two good signs together. And that's what we want, guys. Close up above moving averages, get a cross, and also have a great candle there, like a hammer. And do you see how that confluence? You're looking for that confluence. At least that's what I'm looking for. So guys, the next thing, we're going for our MACD. Let's see. You know what, guys? I think that pulled up the MACD strategy. One second. I just want the normal one. Alright, so on the MACD now, guys, and remember, this is a lagging indicator, so this is taking into factor this move that just happened to the downside here. but that also is a factor in this MACD. So we're having a histogram that's ticking negative right now, and it's also looking like we're starting to get a little curl here. Now, this curl, we have not crossed down through the signal line. We have not had a bearish cross to the downside there. So sometimes, guys, you can even come down, come close to, and then bounce back up and open again. So basically with the MACD, I would not look at that right now. It's not really telling us a ton. Like when we got this cross back here, that was significant. When we had the doji confluence on good volume, and we had a nice little move to the upside. So right now, I'm not going to pay a ton of attention to the MACD, but we're going to have to watch it. Histogram is going negative. Pay attention to the volume, guys. We're not getting massive volume right now, which we would want if this was a hammer candle. We would want bigger volume. So basically a stick like this, like we had here, is what we would be looking for. And then we're going to look at our RSI. It's our relative strength index, and it's going to show us the power of the moves that are taking place. Okay, guys, so right now we're starting to bend down a little bit, so we got to pay attention to that. We're at 53 right now, so we're not overbought, we're not oversold, we're in the neutral territory, which is good, which shows even from here, guys, we could have a nice, this little area could be defended around 52. We could get a nice little bounce there and come back up here and try to get over this 70. That's a possibility. Or we could drop down, and my first area of support, I would look at about 47 on the RSI to see if we have any support. So guys, what I wanted to bring to you is the close today for Digibyte is going to be very important. We're going to pay attention, see if we get any golden crosses, anything like that. But, we're just adding this stuff up, and we're saying, okay, if we close up above that, we close above these moving averages, it's a hammer candle, we get some other things that are going along with it, that could be a good sign, but you would still want to wait for confirmation the next day. We can't overemphasize waiting for confirmation is very important. So let's pay attention to it, guys, see where we close today, see what happens. God bless each and every one of you.